Hi, and welcome to this chapter, Patterns. Although pattern recognition is less important than market understanding and known demand and supply zones, it is imperative as a trader to be aware of certain market patterns, as eventually the market is to some extent a majority perception and all-round mass psychology reflection. So in this section we will highlight some of these patterns and how to trade them. So the first pattern we'll be going through is what we call a double top pattern. It is a pattern that comes at the end of an uptrend. It forms almost, you can see, a double top, two tops that meet each other. It's a first high and a second high at the same point roughly. Then we have what we call a neckline, which is the bottom. So if you can see an M, it would be the bottom of the M would be what we consider a neckline. Now where you find this, like I said, is in a bullish trend. How to trade it is you can either trade a sell on the second high or a break and retest of the neckline. So that neckline there has to be broken, means price must fall through, and then retested into that area, which is now considered the neckline. Or we can call this from a high to a new low to a lower high. Exactly what we used to do in our trend and in the explanation of how to use a trend, but now we're just using it in terms of a pattern. Then we get a real life example. This is a real life example. This is what it looks like. Ideally it's a double top. Then we can have a second high. We can either sell there, or if we got clear candlestick formation, well, it wasn't really so clear. So then we had the fall and the break and retest of that neckline, as you can see. First is a retest and give us another candle signal to sell. So let's quickly go into a proper chart example. So here we have a pound pair, but it's not the one I was actually looking for. Where's the pound pair gone now? Yeah, this will do the examples fine. Okay, so as you can see, the price rallied up, it came to a double top, and then it made almost like a structure here that signal wants to go lower. We can also use our divergences to spot these areas. Just as much as there's a double bottom, which we'll get into shortly, there's also divergence, which is also a double bottom. Here's also a double bottom, which also had slight divergence. Here's an elongated double top, so that's also a divergence there. So you can see where the double tops line up, there will be some form of divergence. That gives us a sell signal. But like I said, not all double tops are a textbook example like that. Majority of them look like this, very unstructured. But you got to see that in trading there is no such thing as a textbook example. No matter what we show you here, there will always, this is just a guideline on how to trade a double top. But in real life, a structure will look something like that for a double top, or like this. It will be elongated, prolonged. It will look completely different to what the textbook does. So now let's move on to a double bottom. It's very much the same as a double top, except it's obviously the reverse. Except it's found at the bottom of a downtrend. We have the two lows that meet each other with a W looking like that. We have the neckline at the top of the W, and then obviously we have the neckline break and retest. Obviously upon this we'd like to see a break and retest, so we can actually see a further trend continuation going upside. Now obviously a real life example is much like this here. We have the two double bottoms, a neckline, a break, and a retest of that neckline, and a continuation. So let's go to the chart. So as we said, we had this here, a double bottom, two bottoms meet each other, a break upside, a retest of that neckline, yes, and a continuation to form another double top, and it fell down. Here's another double bottom. See, now you got to be careful with this. This double bottom formed, but this was considered the retest. That red candle there, as that is the retest. They won't come perfectly to the neckline sometimes. Sometimes it goes a little bit past it, then goes up. Sometimes it goes a little bit just before it and then goes up. So you got to be vigilant on what price is doing. Let's move on to the next candlestick patterns and stuff like that. Then we have a head and shoulder pattern. this is found at the end of a bull trend. So let's go quickly and find one on the chart. Currently on EURUSD, we have something very, very similar to this. But now, how we identify it is that we have a left shoulder, a head, and a right shoulder. Now, once again, guys, this is a textbook example, okay? It often doesn't play out like we said in a textbook example. But let's first show you the trend line that we have to break first, and then the trend line retest, and the neckline as well. Here we can see we had a significant trend line. As you can see, we're moving all the way up. It has now broken that trend line. This is now the retest. Obviously, ideally, we'd like to see a double top structure on the 4 hour even before we start selling. But this is our neckline where the two shoulders meet. That is our neckline. How we target this using the head and shoulder pattern is simply you measure from the top of the head over here all the way down to the bottom where the two bottom shoulders met, and then you simply double your target and it'll give you a target to the downside. So how do we trade a head and shoulder pattern? You can either sell on the right shoulder and then wait for it to break that neckline and then the retest and then sell again. Or the safer method is wait for the neckline to be broken and then the retest of that neckline with candlestick information like a bearish engulf, a morning, evening star, a inverted hammer, anything bearish, and then obviously we like to get that's our signal to sell, and we sell down to the intended target with our risk reward levels. Okay, so let's move on now to an inverted head and shoulder. Now what is an inverted head and shoulder? It's a head and shoulder that's upside down. So let's find one here on this chart. We have one on the left here, left shoulder, a head, and a right shoulder. Let's zoom in quickly so you can see better. Now this is trading view that we're using, so don't worry, it does not look the same as your MT4, but we'll get into that a little bit later. We've got a chapter on that as well, what MT4 is. But for now, as you can see, we have a head, left shoulder, right shoulder. How do we target that? From the head to the neckline. Okay, and we simply go and we double the target up like that. Did it meet the target? Yes, it did. Okay, to select it, you just press Control and it would make a double item. So that target was fulfilled. Right, so let's move on to our next pattern. Here we have a flag. Now, a flag literally looks like a flag in real life. It has a flag pole, the flag itself, and how we measure a target for that flag pole is equal to the length of the flag itself. So let's try to go find one on our charts. As you can see, we have a structure here. Let's move all this away quickly. Here's one there. Okay, this distance over here from that low to that high, with this, as you can see here, it looks like a flag. You might see that. The bottom, which is the low, to the top, which is the high, it made like a price was in a range, we call it the box range strategy. We'll get to that in a later course as well. But here we had our breakout and our retest of the flag. Did it confirm? Did it go all the way to our price target? Yes, it did. So there is a flag, bullish flag pattern. Now we also have what we call a bearish flag pattern. A bearish flag pattern is exactly the same as this, except the other way around. So if you're in a downtrend, you look for a trend continuation pattern, which is a bearish flag. In an uptrend, like this example, we look for a bull flag. It's a trend continuation pattern. It will allow you to trade the trend, and ideally how you trade it is you wait for the break upside and the retest and then the continuation. And how you target it is you measure your pole length and you double up on top of each other. So that is now a bull flag. Let me try find a quick example of a bear flag for you guys. Here again, that's another example of a flag, a bull flag. And here's a good example of a possible bear flag or pennant. The pennant is how you trade a pennant. We'll get into that shortly, but it's exactly the same as how you would trade a flag. It looks like a flag itself, except it just has what we call like a pennant shape, almost like a triangle shape. So a pennant and a flag are traded exactly the same. It is like a flag, but it just looks like a triangle. Not too difficult. So you get a bearish pennant, which is this example, and let's go to try find a bullish example of that. This over here is a bullish pennant. How you trade a bullish pennant? The same way you trade a flag. You measure the pole from the bottom to the upside, and you simply double it up. So where was the retest? This was the retest, as you can see, of the trend line, like that. And then we had the continuation to the upside. What was our signal to buy here? Simply the morning star. Very simple, guys. So there's our flag pole, there is a bullish pennant, there is our continuation to the upside. Now trading the break of this is a bit risky, so we will always wait for a retest and the continuation. As you can see in this example, there was no retest. You see, sometimes you get lucky, you get a retest. The retest is a safer option. The retest would ideally have been something like this, where price goes back up to retest the trend line and then falls the length of our pole. But that didn't happen. So sometimes price can just break and then continue to fall. It is your own personal decision on which you would trade a breakout. Personally, I wait for what we call a breakout and a retest, similar to that, but it requires patience. This trade, you can see, was on a daily, so you would have waited 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1 month. You would have waited 1 month for this trade to come into play. But that's trading for you guys. You have to have patience sometimes and wait for the setup to arise. This is called a setup. We'll obviously get into that a little bit later in the course. But for now, just need to remember your head and shoulders, your inverse head and shoulders, your double tops, your double bottoms, your bull flags, your bear flags, your bearish pennants, your bullish pennants. This is very much textbook work, but it's just an application of it. It probably just needs a bit of fine tuning, which is not too difficult if you think about it. So, in this chapter, all you need to memorize is the structure of the actual formations, where we trade them, how we trade them, and the type of what are they, the trend continuation or trend reversal. Bull flags, bear flags, bullish pennants, bearish pennants, bullish pennants, sorry, excuse me, they are examples of trend continuation. An inverse head and shoulder, trend reversal. A head and shoulder pattern, trend reversal. A double bottom formation, reversal. A double top formation, reversal. There are a few more patterns, but ideally you don't want to be trading patterns too much, because in the market and trading, the market makers like to use these patterns to fool traders. So often you'll see a double top might, while it's in a trend continuation, a double top you might be thinking wants to reverse, but it's actually in a flag, and they'll make a double top formation and then they'll make a double bottom. Now, how do you get people to sell to place their stop losses on a bull flag? On a bull flag, you can see here. If I was here, it would look like if this wasn't here, this would be a double top. You get people to sell, place the stop losses here, bring it down, and then shoot it up. You'd hit all those stop losses that are sitting there for the sells, when in actual fact it was a buy. So you got to be careful on. Don't be too much looking for reversals all the time. You can also get continuations. Like I said, bull flag, bear flag, bullish pennant, bearish pennants, those examples. Go through this chapter thoroughly, please. If you need to review it multiple times, please do, as this is important work. and then you can move on to the next chapter.